Hi, this is Mark with your analysis for the week commencing the 30th of January. Lots of candle closes due tomorrow, of course, for the month end, and we will go into that in greater detail tomorrow evening. But this is the Euro USD on a weekly chart, and as you can see, although price did move up last week a few hundred pips, it closed exactly where it started, which is a sign of major indecision. However, this does look bullish to me. We broke above the 50% fib. We broke above the moving averages here, and we also have a monthly 55 down here. So personally, I'm interested mainly to long. When the monthly candle closes, unless we have a major move down tomorrow, then this looks like it will be a pin bar, bullish pin bar candle. So that will be my bias for the week ahead. This is the Euro USD here, and I analysed it correctly last weekend. Suggested a pullback here to 35.35, I think, and I missed it by 3 or 4 pips, and it promptly went 200. But we've all been there, we've all seen and felt the pain. You just have to move on. What it did do on Friday is price broke back down through this trend line it had in place all week, which price did bounce off. So we now need to decide what we're going to do. From a long perspective, I would be interested for a pullback. The main pullback will be back down here, as I've just shown you from the weekly and the monthly setup, so you'll be back to 3400. The others amongst you feeling a bit more aggressive will be thinking in terms of here, this weekly 200, around 3520, 3500 for a potential move up. The concern is we're getting a 5-8 cross possibly forming and stochastics rolling over. What we may see is a few days down and then up. This is a major news week for all currency pairs this week, including the euro interest rate news. So it's going to be very volatile, and as the week progresses, we're then going to hit NFP Friday. This is the Swissy. If the euro is going to pull back and go down for a while, then the Swiss is going to go up. Now, earlier in the week, I'd said to you that when we got this breakout and pullback here, we'd look for a pullback to 94.60 area for a short, and it worked on a number of occasions. The only thing is it was only 50 or 60 pip move. What I'm looking for now, if the euro is going to go back down before a bounce up, I'm going to be looking all the way back up here around 9600. This 55 will have pulled further back down. We have the trend line in place. This is the main area I would be interested for a short. Counter trend traders amongst you may be interested to long down here at 93. It's not for me, but if you do it, then I strongly urge you to only risk half your normal stake. This is the pound on the weekly. Now, the pound on the weekly is very messy, but what you have been able to do in recent weeks, so I was talking in terms of bounces off 160, bounces back down, and bounces up at 158.00. And this is the daily. You can see on the daily, the counter trend traders amongst you had 7 or 8 opportunities to short at 160 here, and on a 4-hour chart you had about 20 opportunities to short this, and we were talking in terms of bounces at 158. Now, this is very interesting. Go back to the weekly, but I've taken everything off except 2 EMAs. This is a pound dollar on a weekly chart. Now, you have to be patient with this and not pile in straight away, but what we have here is a cross brewing of a 34 EMA over a 55. The last time this happened was way back in July 2008, and price fell 6,500 pips. Prior to that, there was a move up of 2,000 and odd pips. So if this cross forms tomorrow, or certainly next weekend, if being the big word, then we could be due a major move up on the pound. Watch this area very closely. The negative side is if price pushes on it quickly earlier in the week, it could actually push it away. But this is going to be huge now, because we then have a potential weekly move of thousands of pips. And weekly traders will be thinking in terms of a long here around 5700 with a stop down here that would scare some of you to death of 300 and odd pips away. But if you are looking for thousands of pips of movement, then 300 pips is nothing. And all you do is reduce your stake accordingly. It still risks the same amount of money. So if you risk $100 on a trade with a 100 pip stop, you still risk $100 on the trade, but this time with a 300 pip stop. But watch this space, watch closely, and see what the monthly candle does tomorrow. Because here we have this candle, the current monthly candle, which will close tomorrow, is a bullish engulfing candle. So lots of clues that we could be on for a big move up here. This is gold, and gold last week had shown you this head and shoulders pattern. I'm expecting gold to come down and at least hit this 200, so it almost got to 1300 the other day. It is beginning to look bullish, and we've got the Bollinger Bands have closed, 5/8 cross and everything forming, so it could go back up again. If it went back up again, I would be interested to short here with 34.55 cross again, previous major support and resistance, and we are below for this head and shoulders pattern. Silver similarly bounced up the other day. It's now hit the trend line. This is the crucial area. Is it going to carry on, or is that going to fall further? Aussie dollar, very frustrating, but this is the thing about patience and discipline. I keep moving these lines to tidy this triangle pattern up. What you do with the triangle pattern, you wait for a break and a close out of the area in either direction, and then a pullback to the area. So if we are to get a short here, you would look for a break and close below 98.75 area, down to here, pull back with a view to a big short, and equally if price was to break above 100.20 I've been looking for the last few weeks, I would be interested to long. However, notice the Bollinger Bands. What's happening here, this is a sign of liquidity drying up, and this is a huge week for the Aussie dollar. I think there's about 12 major news releases. There's also the ongoing problem with the flooding and the coal mines being shut. There's a lot going on in Australia. So watch carefully around the news, because the news could be the thing that is the catalyst for a major move here. The nearer price gets to the point of a triangle, usually when we get the break, it will be a big one. And the theory of a triangle breakout suggests that the size of the triangle, i.e. roughly 500 pips here, will be the size of the breakout. So watch this space carefully. Once again, this is a matter of being patient and disciplined and treading very carefully around the news. Aussie dollar yen. Now, last week it bounced all over the place, but we are below all these EMAs. I shorted at 8,200 last week. I had one winner and one loss out of it. I will be interested to short again at 8,200. And what I would do is I would place my stop above the trend line and the EMAs. So it's only 40 odd pips away. And we're looking for initially, yes, it's only 60 odd pips here, but the more price gets down to this area, the more likely it is to break. And I will be looking for an overall target here of 120. So my risk reward ratio is still 1 to 3. Dollar yen, very frustrating, very annoying. Large parts of the year I don't trade it. Again, we're waiting for a triangle breakout. And what I was saying the other day, I want the triangle to break, this to close below 81.90, then with a view to a pullback for a short. Or from a long perspective, realistically, you could go here, you go for a break of the 55 and a close and a pullback, but it might only get to this 83.30 area, which is not very far at all. The other way to do it is wait for a break and close above 83.30 with a view to a big move up. Be very wary though with all things with all things yen, as the Bank of Japan have indicated that they will intervene as it's officially known, to protect their currency. They do not want the dollar way down here against the yen, and therefore they may start to intervene. Euro yen on a monthly chart. Once again, this will close tomorrow. If this closes where it is, that would signify a potential huge move on the euro yen. This triangle formation is 6,000 pips big. We've watched this for months and it's teased and teased and teases. Well, if it closes outside here, we've got a 5/8 cross forming, we've got divergence on MACD, there's loads of things suggesting it's going to do. And what did it do Friday? It pulled right back. Now, last week I'd said to you to look for a long here around 112, and I caught this, and it moved absolutely nowhere for 3 days, and then finally shot up to the target area up here, which I'd suggested to you last Sunday would be this 200 on the daily, which it did it to the pip, bounced back off, and then this huge move back down Friday. 5/8 cross forming, stochastics starting to roll over, so there is a suggestion it's going to pull back. If it pulls back, then for a long, I will be interested to long here, 50% fib with these EMAs in the way. But as I say, going back to that monthly chart, we've got to see it close outside for a big move. So pull back to here with a view to a long, or if it can break and close above this EMA later in the week, then we would be looking for a break of here and a pullback. Euro pound, very, very messy. I don't like this at the moment, but what did it do? This particular pair seems to me to respect fibs more than any other. And what I mean by that, where did price stop on Friday? To the pip, it bounced off the 78.6 fib. It stopped to the pip and closed here at the double top 100% fib. On the way up, it stopped at 61.8. It stopped at 50. You see how many times it interacts with it. Now, this has broken 78.6, therefore you think in terms of a long. The areas to consider initially would be around here, around 85.50, but I am a bit wary with this, guys. Sometimes I really do well with the euro pound, other times I tend to leave it alone. Perhaps for me, I would be more interested if we get down here to 85.20 area. There's a few EMAs, these will have moved up, and there's a fib. So if we're working on the theory of the fibs again, then we'd be looking to long around 85.8. Of course, those of you wishing to short, it's got to get back down there first. Final one's the CAD. Now, the CAD has been a fairly safe bet, shorting at 100 for the last few weeks. Each time it's come up to it or near to it, it's gone back down again. On Friday, just to tease us, it's closed about 8 pips through the actual 1-for-1 area. The Bollinger Band here is opened, and stochastics, it does look a bit bullish, does this, guys? And if we look on the weekly, we have a potential 5-8 cross forming now, a bullish candle last week. Be careful with this one. This is another one. This is like the dollar yen. I trade it sometimes, but it tends to whipsaw a lot. It goes, shoots up one day and down the next. If this is going to pull back, then areas to consider for the pullback would be fib areas, or all the way back up here to 10150, which is where we had previous huge support and resistance. And below that, we will be looking in terms of, let's see, the next major line in the sand for support and resistance is around here, 10075. So maybe this area here, but be very careful with this. And I really wouldn't trade this on anything smaller than a 4-hour chart and possibly even the daily chart. Wait and see what happens. But I would only be interested to short this pair. Long-term downtrend, not interested counter trend trading for me. So looking for a pullback. Okay, let's have a great week. As I say, my priority in an NFP week is to make my total pips for the week as early in the week as possible, because by Thursday things start to go sideways. Friday morning they go all the way through London, they go very, very slow, and then we have the chaos of NFP news around the New York Open on Friday. So let's see if we can make the pips early. I will be back with you tomorrow for another update. Have a good week.